They look pretty good. They look exactly as economists had forecast, coming in up 1.4% for the month of March. We got to check the revisions to February. Ex-autos, though, up a little bit more than thought, 0.5%, but it does show that a lot of the spending was on cars, people getting ahead of the Trump tax increase with that. The control group, the important one that goes into GDP, up 0.4 on the month. That is down from 1.3%, revised up for February. So all in all, better news for the retail sales control group than it would appear. And we don't have a revision, it appears, to the advance headline number, 0.2% in February. So 1.4% and 0.4% on a 1.3% revision. So is the control group, and that's the baseline numbers. Shows people were pulling ahead purchases ahead of the Trump tax moves.
So, Mike, you don't think this points to strength as we approach the April data, which is going to become more important to see how this effect from tariffs starts to bite into the economy?
I don't think we can say that at this point. Now, I need to take a look at what the breakdown is, but the expectation was people would act to get ahead of the tariffs. We saw it on the business side with lots of imports of business industrial materials, and now we did see a big change in terms of overall purchases for consumers, and it does look like a lot of that came from cars. Now, the March advance in motor vehicles was 5.3%, so a very strong motor vehicle sales month, it appears. Building materials up 3.3%. Food and beverage stores kind of a light 0.2%, but gasoline stations were down 2.5%. So you can see the impact that the car sales had. They overcame the fall in gasoline prices. General merchandise stores up 0.6%, and of course we always want to know what happens to non-store retailers. They didn't have a great month, up just 0.1%. Food services and drinking places, we all went out and celebrated before the taxes went up on imports, 1.8%. So this doesn't suggest that we've got uniform strength throughout the various categories, but it does suggest people were spending money in March after spending money in February. The question is, do they keep that up now in April?